Hello grade 12s, I'm going to continue my types of investments and I'm going to speak about shares today. Now we are only interested in the concept of what a share is. Later on you can study all of these detail that they want in the core content as well. But for now I'm concentrating to explain to you what the concept of a share is. Okay, so we are going to continue. A share, as you guys would have remembered when we did forms of ownership in grade 10 and 11 in public companies, a share is a part ownership of a company, and they sell these shares on the JSE in order for them to get capital to fund their business operations further if they want to expand or use the money for other purposes. Now that makes you a part owner, and as a shareholder you are entitled to a dividend. Now a dividend is not interest bearing income. It is going to be dependent on the performance of the business. So if the company that you invested in is doing well, then you will receive a dividend. If they did not do well and they did not manage to make a profit, then of course you will not receive an income or a dividend. Now you will see here that they speak about all the different types of shares, and later on we will be speaking about types of shares and things later, but I don't want to do that right now. This is the most basic form of what a share is. Now in terms of ordinary shares, your core content says a share gives the holder 1 vote per share. Now at the annual general meeting of public companies, they will put it to the vote of shareholders, any decisions that they want to take or who's going to manage the business and so forth. And depending on the type or the amount of shares that you've got, you have those types of votes. So if a company has got 1 million shares and you own 1,000 of those shares, then you will have 1,000 votes out of 1 million. Now, shares are bought and sold through a share broker or a stock broker, and these people work at the JSE. In America it's called Wall Street, on the New York Stock Exchange, and there are many other stock exchanges, but normally when you buy a share you do it through a stock broker on the JSE. Right, now grade 12s, shares do carry quite a bit of risk. According to your core content it says shares have low, medium risk, but now this is the catchphrase over here. Over the long term. Over the short term, we speak about market volatility, and I will explain that to you with a graph that I've got here at the bottom. And there it is. This is the share price of Nike. Now, what you can see here is the years, 2012, 2013, 14, 15, and so forth. So guys, what you can see here is there is generally an upward trend. It seems to have an upward trend over years. Can you guys see that? But let's say I have bought a share over there. This is now midway through 2012, and now I've lost my risk appetite and I've sold it there. Then I would have made a capital loss. So over the long term, you guys see all of these little movements that you can see here. We speak about that as market volatility. Now shares can be quite volatile over a short period of time. So therefore it's not advisable to put your money into shares for the short term. Shares is a long-term investment, and over the long term you probably would not have as much risk. Now later on we will do preference shares and all of those things and why their risk is lower. But for now, this is what I want you to see, is the risk factor for shares and why it is for a long-term investment period. Over the short term, risks can be quite high when you buy shares.